Hi, this is James Shug with Westpac London's End of Day report for Thursday, September the 20th. It was a down day on most European markets today, right from the get-go, with the HSBC's preliminary Chinese PMI for September showing a slight rise, but still I think it was the 11th straight month of contraction. The detail showed output falling as well, so the concern that the Chinese economy might be continuing to slow was heightened by that report, and fed through to equity market weakness that never really recovered during the European session. In fact, it was compounded by European PMI figures, which showed in the preliminary September read, what was it? France in particular, that's right. France saw much sharper declines than expected in the factory and services sectors, more than offsetting better results in the German series for those two sectors. So the overall Euroland PMI was down. The composite fell from 46.3 down to 45.9. The manufacturing composite was down from it was up from 45.1 to 46, but services down from 47.2 also to 46. So Chinese concerns, European growth concerns, and then in the US we had initial jobless claims, the weekly measure of layoffs in the US business. Although it improved from 385,000 to 382,000, the previous week was revised up, and both those outcomes leave in place a significant uptrend since August in claims. So that's a sign that the labour market has deteriorated somewhat in recent months. And that's consistent with what we saw in the latest payrolls report, although not consistent with some of the other indicators of the labour market. So a bit of a mixed picture, but frankly, jobless claims and non-farm payrolls, the BLS official report, are probably the two most widely watched measures of the labour market. Other US data included the Philadelphia Fed's factory survey. It remains negative for the fifth month running. It improved somewhat. It lifted from -7 to -2. It didn't quite improve as much as we expected. We were at the top of the market with +2. But I suppose the headlines is one part of the story. Some of the detail was particularly weak, and I think it was orders and jobs. So the concerns about the economy were heightened by that as well. The other main data points, a few other bits and pieces. Oh yes, UK retail sales as well. Down slightly in the month of August. The detail made it pretty clear that the Olympics had an effect there. There was an increase in apparel sales, and a lot of that was in sporting apparel, but things like household goods, non-store retailing, which is basically internet shopping, they were down quite sharply. So basically people weren't shopping, they weren't on the internet, they were watching the games, it seems. And that certainly fits with my own personal experience living in central London. It was dead, particularly in the first week of the Olympics. So those are the main sort of data points to mention. So market action. Oh yes, the Spanish had a bond auction today. Most of it was 3-year bonds, but the 10-year bond component, less than $1 billion of the euros of the close to $5 billion they issued today, went off at a yield around 5.67%. That is down 100 basis points from where it was a month earlier when they had their previous 10-year bond auction. So a significant improvement there. The issue going forward, of course, is going to be that if Spain continues to prevaricate about whether or not to accept a bailout from the ESM, which is going to be signed into law next week, the bailout, of course, coming with conditions which will potentially impose further political hardship, if not austerity, on the Spaniards. If they don't do that, they don't get the ECB to buy their bonds. And so the market's been anticipating that the ECB will be buying their bonds, and that's why yields have come down so much. That's why they got the 10-year away so much cheaper. But that won't happen forever if the Spanish don't take out a bailout. So with the Spanish regions, Catalonia in particular, in difficulty again, the Spanish regions are putting more pressure on the Spanish government for financing because they can't access financial markets anymore themselves. I suspect it's only a matter of time before Spain does agree for a bailout, probably before the end of October. Right, now onto markets. So the FTSE in London was down 0.6%. The commodity producers led the way there. Copper prices were down today, related to the China story. French markets down 0.6%. I think Peugeot Citroën had some difficulty, revealed some difficulties there, and that hit their share price. German market flat today. Spanish market down 1%, and the Italian market down 1.7% today. And the Dow, just after 5 o'clock London, so it's just heading into lunchtime in the US, is unchanged on the day, which it has been fairly recently when I've been reporting this. It's at 13,566. That's about it really for those markets. In the commodity markets, as I said, copper price is down more than 1% today. Gold's off 0.2%, and oil is up 0.3% at $92.25 a barrel, but remember it fell very sharply yesterday. The Aussie dollar, when we started in London, it was down around 1.04. It's at 1.042 against the US dollar at the moment. All right then, that's it from me. I'll be back again same time tomorrow.